I can actually say that's exactly what the markets are looking at, because right now the big beautiful tax bill just passed. It's on its way to the Senate. It passed by 50-50, and then the vice president had to jump in and make the deciding vote. So that's what we have so far. But also the Federal Reserve Chairman Powell, he actually said if it wasn't for those pesky tariffs, we'd be cutting rates by now. So how's all this affecting these over here? Well, let's get to it. So my name is Dan Frio. I actually do this report twice a day to inform you guys what's going on with those things over there. And the main reason I do this is I want you to understand the whys behind what's going on over there. So mortgage rates were basically flat today. There wasn't really a lot of data other than the bill passed, the big beautiful tax bill passed, and it's now on its way to the Senate. We'll see how that goes. Powell's saying if it wasn't for tariffs, he'd be cutting rates. But the economic calendar that we have is actually showing us where those jobs numbers are coming actually tomorrow and Wednesday, or tomorrow and Thursday. So let's take a glimpse at what the Federal Reserve might be looking at when it comes to the jobs report, because I also want to answer that pesky question a lot of people still have. Are rates ever going to go back up to 8%? Well, the question also that I get a lot is, are they ever going to go back down to 3%? I'll get to that in a second, because the reason why I want to point this out is Yahoo Finance actually reached out to me about a week ago, and they actually mentioned me in their article right through here. So we'll get to that in 1 second. So right over here, here's what we want to focus in on. This is the data that the Federal Reserve basically relies on to control this thing right through here. So they look at inflation, they look at the jobs numbers, and they look at the GDP. Well, we had GDP coming out last week. It was a negative 0.5 from a negative 2. We'll have a revision on that coming in, I think, tomorrow from the Atlanta Fed, how the GDP is looking now. We had the PCE, which notched up just a hair last reading. It was last week. It went from 2.2 to 2.3, so a little bit of increase in inflation. Now it's all about the jobs report and the jobs numbers. So this data is going to fill in the rest of this week. So tomorrow we have Wednesday. We have the ADP payroll numbers coming out. We'll look and see how that goes, but we'll see if they also have revisions. They have sometimes some major revisions on here. But then on Thursday, this is the data we really want to focus in on. So if you're out there looking to buy, you're looking to refinance, Thursday is going to be a day you really need to watch my videos, because this will be news that will be affecting these things over here. So let's get what's projected. So on Thursday, here's what we're looking at. Average hourly earnings is supposed to downtick just a hair. Initial jobless claims are supposed to basically come on right at point. The unemployment rate, they're saying, might tick up to 4.3. They were thinking this might go to 5% just a year ago. So we're going to pay attention to that. Then Friday, the markets are closed for Independence Day. So the rest of the news coming out the rest of the week is going to be job related. One good piece of information that came in today was the JOLTS number. That means job openings and labor transfers. There's 7.7 million job openings. There's 7.3 last time. So the job openings are coming out. They might helping people maybe get that next job a little bit easier.